I sold my personal holdings and my family's holdings. I sold all my U.S. treasuries, every single one of them, and I bought the GLD. When Google goes down 30%, I'll tell you that I'll start selling some gold. If you're spending money on defense, you need copper.
Does gold still respond to geopolitical tensions? I'm joined now by Lowell Kamin. He is a president and CEO of Lodestar Metals, and it's a very interesting company based in North America. We'll talk about his projects, but importantly, we'll talk about the entire global commodity complex at large. What's about to change in 2026? Lowell, good to see you on the show. Happy New Year. Welcome.
David, appreciate you taking the time to talk to me today, and hopefully we can just have a good banter about what's going on in the markets, and Lodestar will be part of it.
You've had a storied career working in the commodities industry for decades, starting with banking and now as an executive of the company or a company itself. Tell us about what you see currently in the commodity space that maybe was different 30 years ago. The fact that copper's at all-time highs, silver is at $80 an ounce, gold is nearing $4,500 an ounce, and now the president of the United States just took over Venezuela overnight. And oil is next on the agenda. So yeah, tell us just what is going on.
Well, from my perspective, it's exciting, right? To me, it's it's incremental information every day on the story of commodities. And, I believe in 2016 with Brexit, we started deglobalization. And, we're in our second term of Trump, which, is very America first. And we're seeing, the repercussions of those changes going on from a global economic and geopolitical landscape. So if you take that as a backdrop and you think about that, there's, three different types of cycles, right? There's normal business cycles, which are 3 to 7 years. There's Kundit cycles, which are, 15 to 25 years. And there's Kudrovian cycles, which are 40 to 60 years. And if you draw the comparisons to what happened in the S&P 500 in, call it March of 2009, when it was March 9th, 2009, I believe we were 666 on the S&P 500. So call it 700. And now we're at 7,000, call it 15 years later. So that's a typical Kundit cycle. And, we might have another 10 years to run. Yardeni's talking about 500 in S&P 500 earnings and 10,000 by the end of the decade. And I'm sure that that'll be an estimate that'll go up. But if you think about that, and then you think about, what's happening from deglobalization, and you try and apply some of that same thinking to a Kundit cycle for commodities, then you can look at, kind of March again of 2020, which was a COVID, so an inventory bottom, just like in March of 2009, which was another inventory bottom. And you can see that, you kind of bounced along, like the S&P 500 kind of bounced on from 2009 to 2011. I got incredibly bullish on the S&P 500 in 2011. And then you can draw the same comparison to gold from 2020 to 2022. And, then we started to break out, right? Like you went from 1800 to 2000 as a floor deck, down to 1,000 to 1,200. And then you broke out of 1800 to 2000. And then if you think about, gold in 2003, breaking out from $300 to, 18 to $2,000 in September of 2011, you can easily draw a comparison of, 2,000 times 6 times gets you to, 12,000 gold. I don't want to sound too bullish, but, somewhere around $20,000 of gold is probably where this supercycle over 10 or 15 years takes us. And so you have to have a framework. And so the framework is bullish. The framework is this Kundit cycle. And we're just getting started. And if you talk to some of my commodity buddies, like at T. Rowe Price or the ex T. Rowe Price guys or ex people that I used to work with, we always argue about, what year does this look like? And, what inning are we in? And, if you ask me what inning we're in at $4,500 gold, which is always a thing that leads things out, I would say to you that we're in the third inning. But, some of my contemporaries in the commodity business will tell you that, we're just at the national anthem. That being said, things have moved. And so you have to be cautious about parabolic moves. You've got to be cautious about, Elliott wave theory, which wave are we in when you look at it, what commodity at which price. But at the end of the day, with the geopolitical situation, what's being spent on defense spending in Europe, what's being spent on defense spending throughout the world, gold is going to go higher, silver is going to go higher, copper is going to go higher, and eventually oil is going to go higher. If you think about where gold was kind of 18 months ago, and you think about what the geopolitical changes could be in oil over the next 18 months, it's very easy to see that, as we were talking about earlier, in the commodity business, there's two things that you talk about. One, does the oil price know more than you do, or the stocks know more than you do? And without going into too much detail, I'll say that the stocks know more than what the oil price says this time, which is a change in my 30-year career, because usually it was always the oil price. But, we're still in contango in oil. Sea-bearing crude is in decline. Middle East politics is playing in a big way. Saudi wants protection from the Americans. They just got F-35s. America and Russia will come to terms at some point here. Things will settle out, and companies are a lot more profitable in the oil business. So I think the companies themselves are telling you the way that the oil prices are going to go. And I feel at some point here, OPEC and Russia will get their act together and start curtailing supply. So that's kind of my simple view.
Let me come back to precious metals in just a minute, but let me pull up an oil chart. You suggested that oil is going higher, and I'm wondering, oil hasn't had a great year. I'm wondering why you think oil is going higher, especially since Venezuela now has the world's, well, not now, but it's always had the world's largest oil reserves, but now the U.S. basically controls that. So would that flood the market, you think?
Well, first of all, it's heavy oil. So like Valero's going up, like how many refiners can take that? Like, you have to look at pad 2, pad 3. You've got to look at what the ports are like where can take it in, where can the crude come from? There's so many different things underneath all of that, that's a headline that just, makes people think that oil prices should go lower. But, to me, okay, so a few years ago, I looked at TD Bank's chart, and I was like, that's one of the best 5-year charts I've ever seen in my life. There's no way that TD Bank is going to trade where it traded in 5 years' time. There's so energy, electrification, all those different things. But, we're still going to need oil in the world. And that chart to me looks like something you buy, not something you sell. But you have to have a longer term view, and you have to be patient. So you're quoting something that's a headline that I'm hearing on Bloomberg News, Tom Keene and those guys, they're supposed to get listeners. So, my job as an investor is to see through what the noise, what the news is that's coming out. I mean, how big is the oil market? You're talking about 3.5 million barrels of heavy. How big is the heavy oil market? How many people can actually take that in? I'm a buyer.
The fact that copper is at all-time highs, what does that signal to you? Dr. Copper, on the one hand, some analysts say, is a precursor indicator, leading indicator for global economic growth. But on the other hand, I've heard analysts say that perhaps it's only going up because of supply constraints, not because of demand. What do you think?
Well, it's interesting, living in Vancouver where you live, sometimes we're up early in the morning, think about things, and Gemini 3 and ChatGPT are great things to talk to in the morning, and you just go back and forth and you start doing some research. And I think what you have to do is look at what the prices are globally, right? So what is right now. I think that copper is trading at a discount in China to the LME and COMEX. So if you can get it out of China, you can make a profit. I don't know. That's probably a reason why, copper is, be capped a little bit here. I think the supply, if you look at all the charts, right? They're goalposts, right? So 2000 and whatever year you want to make it, we're in a serious deficit of supply for copper. the bottom line is, if you're spending money on defense, you need copper. That's always been my view, is that copper will be strong. Like when defense spending is going up, copper will be strong. And I think that's a simple view. What's happening in the short term with, trading back and forth between, the Chinese warehouses and the LME and America, that's hard to be part of. But at the end of the day, structurally, there's going back to the geopolitical sides of globalization and domestic supply and potential tariffs on copper. I think you want to be North American focused copper. I mean, look at what Robert Friedland's doing. I mean, copper is something where you want to be in. They don't call it Dr. Copper for a reason, even though I hate that term, because I think it's really gold that leads things higher and that copper comes along. But as a commodity goes, and then there's another thing to think about, right? If we're in a structural change for AI because of global growth or GDP growth as an accelerator, and things will be stronger because of AI as a force underneath it, then structurally you're going to have higher earnings, which means structurally you're going to have higher capex, which means fixed asset investments inside of things is going to be higher, which means that copper demand is going to be higher, and we're contained on supply. So it's a bit of the old China story for fixed asset investments when you had 8 to 10% GDP growth. And how that played out in copper, that kind of applies to North America now, where if you think that your GDP growth numbers are going to be greater, then your copper demand numbers are going to be higher as well.
How do you see this future of supply chains changing, if at all? If, let's say, a lot of countries start losing their sovereignty, maybe around South America, maybe Greenland is next, and resources just get consolidated between a few powers, how does that change global trade?
I mean, I don't know. Like, who do you think is going to be the next president of the United States? Do you think it's going to be Rubio, or do you think it's going to be Vance? So, I don't know. Rubio, look, he's making a play for the presidency against Vance in this Greenland discussion to me. And, Trump is saying one thing and, Rubio's saying something else. And at the end of the day, there's a deal to be done with Denmark, okay? They're not going to go take I'm not going to bet this, but I'm sure there is a way to bet this, but they already have bases. Like the United States have bases in Greenland. Why can't they just have more bases? Like they're not. You create problems with NATO if you start dealing with Greenland. It's not. I don't think that that's the right thing that's going to happen. Taiwan is a more interesting situation, right? With Venezuela, that's more interesting. And what's going on between Japan and China and Taiwan, that's worth paying attention to. That creates geopolitical risk. That'll create more defense spending. That'll be more use of military assets, and that will increase the demand for diversification into a store of value, which is gold, and into the needs for copper.
Does gold still respond to geopolitical tensions? All year round, it's been going up. Has it been responding to something else besides fear?
I think, my personal opinion, it's responding to the U.S. bond market. Like in September of 2024, I sold my personal holdings and my family's holdings. I sold all my U.S. treasuries, every single one of them, and I bought the GLD. And the reason is for the simple reason that I just thought that if the United States was a building, somebody would foreclose on it, right? Like it's the reserve currency. So I don't know. I'm not a big fan of the long-term nature of the U.S. bond market and what's happening. Although, Trump's done a great job with tariffs. Like he really has, right? Like tariffs a year ago were 3%. Now I think they're 10%. I think the average tariff rate is 17%. Mm-hmm. Like I do think that like there's upward pressure on inflation from tariffs over the next year, but I don't know. It's I'm rambling a little bit here, but it's so hard to really know what the driver of gold is. I can only tell you my personal position is that the balance sheet of the United States and people like the reserve currency status of the United States is not threatened, but it's definitely on the margin, being pushed back at. I don't know. What do you think?
It's quite remarkable. I think it's a little bit remarkable that gold and the dollar have just basically the relationship that we've usually observed, the inverse relationship, that's not always consistent now. And I also think that it's quite remarkable that the dollar hasn't fallen in the last couple of days. The DXY hasn't fallen. This is the DXY on my screen. It hasn't fallen in the last couple of days since Maduro's seizure. So one would assume that people will be dumping dollar en masse, but quite the contrary.
That people are dumping dollars en masse when the U.S. is exerting its strength?
People will lose confidence that the U.S. is actually behaving like a responsible nation. I think it's a counter argument. Same thing happened with Liberation Day in April in 2025. I thought the dollar, some people thought the dollar would have gone up because in the past when Donald Trump imposed tariffs, the dollar went up, it went down. So that's just what I think.
Have you ever heard the term chart art?
Chart art? No. Tell us.
You've never heard chart art?
No.
Well, when you throw up charts like this and you try and understand it, it's chart art. I used to cover the state of New Jersey. She was a PhD in technical analysis, and she would call me every 3 days. We go through charts, and she was the one that used to call it chart art. And so, like the actual chart itself is interesting. That's a picture of history, what's happening. But what's happening with the directional movement indicators? What's happening with the RSI? What's happening with the open interest? What's happening with the futures on top of it? What's happening with the different layers of structure within it? Like, you've got to, when I think about it, I think about the currency markets being the biggest market in the world, then the bond markets being the biggest market in the world. So, the currency markets are interesting. So, I think that if you look at the dollar relative to gold or relative to oil, I think that those are, if you put up those charts, I think those are the interesting to look at, and the relative valuations between them. The Dow to gold theory, the Dow to S&P 500, I think that's the way you look at it. I still have some friends that every single one, when they own Apple from 2009, but they look at their chart in gold. What's their value of gold? Gold's been around for, 5,000 years, and we've been off the gold standard since what year? The 70s at some point? Like didn't Nixon do that?
71, yeah.
Yeah, I don't know. I don't know what to tell you about the short-term movements of the dollar. At the end of the day, in September 2024, I sold my long-term bonds and I bought gold, and I'm not selling my gold. That doesn't mean I don't trim it, but I'm not selling my gold, my core position in gold, right? So,
as an investor, and I'll get to you as a mining manager in just a minute, but as an investor, what prompts you to sell your gold? Anything that would change to make you either trim more of your holdings of gold, or perhaps just once it reaches a certain price, you would take profits more?
I don't have a really good answer, but I have a really good friend. His name is Lewis. He used to be the head of commodities at Dreyfus Trading. Before that, he was at Pequot. Before that, he was at T. Rowe Price as the head commodity analyst. And I sent him a text the other day, and he said to me that he was still 100%. He runs a $4 billion group of funds. And he said he's still 100% long gold equities. And I know when I was talking to him back around the Red Cloud Mining Conference, where he came up and was a keynote speaker, he said he thinks when technology rolls over, and I think that'll be a good time to trim some gold. But until then, he's long, and he's really smarter than I am. So, when Google goes down 30%, I'll tell you that I'll start selling some gold.
Let's talk about silver in just a minute. Now, I want to get your take on this. What's your reaction to the fact that China, over the new year, so about a week ago, decided to announce that they're restricting silver exports? Elon Musk even tweeted this, said that this is not good. Silver is needed in many industrial processes. Earlier this month, China released a list of 44 companies approved to export silver under the new measures. In 2026 and 2027, the new rules in 2026 also restrict exports of tungsten and antimony, materials dominated by China's supply chain and widely used in defense and advanced technologies. These materials have been restricted in the past, so this is not entirely new. Silver, I guess, is a new development. How important is silver's export or China's export of silver for the world? Is this significant for you?
To me, there's like silver everywhere. So like go to Mexico, there's like so much silver, you don't even know what you don't even know what to do with it. But okay, so all of that is interesting. You're quoting a note. You know what the most interesting thing to me about silver and gold is recently over the new year? Did you know that they raised the margin requirements on gold and silver in the last 30 days?
Yeah, can you expand on that?
To 10%.
Mm-hmm.
Yeah, that's the most interesting thing.
On the COMEX, you mean, right?
Yeah.
Yeah.
Money that you need to put up. Like, have you ever read the book Market Wizards?
Yes, the second one.
Oh, you read the second one? I read the first one. The head of currency trading when I was in 1994, when I got in the business, gave me his copy, so it was underlined. And I still remember all the lines from Tudor Jones. But at the end of the day, it's all just very interesting things to think about. Silver to gold ratio, what's happening with gold, what's happening with the trading. At the end of the day, the commodity business is a very interesting business. You have to have a longer term view on it. And what's happening day to day is more noise, especially when you're running a company.
This is my next question. The fact that the commodities have been exploding, how has that changed the mining industry? Have you seen a difference in attitude towards exploration? Are companies now, the larger ones at least, are they opening their wallets a lot more to acquisition and exploration? Are there junior companies expediting drilling and exploration? Let's just take your company as an example. How have you changed your strategy, if at all?
It's very, very simple to me. In May of this year, something changed. Sorry, not May of this year. May of 2025, something changed. You've had access to capital, right? Like that's basically what happened. May, June, July, August, September, October, November, December. I mean, there is capital available. There's there's positive gamma, right? You have positive gamma when you buy commodity stocks right now. You can buy commodity stocks with warrants. You can strip. There's so many different things you can do. You can announce a deal and your stock price goes up. Your intrinsic value, your companies are going up with the capital that's going on there. So in every economic value of dollar that comes in, so if the capital's available, so how much of that is going into the ground for exploration and how much of that is going to be developed? And this is why the base level price of what an ounce is worth in the ground of gold and silver is going up. I mean, that is the fundamental change, right? Is that there's capital available. I mean, Alan Shaw used to always say, the old commodity analyst, and then Luis Yamada, that, everything operates on fear and greed. Like you're going back to the old Smith Barney, right? So, Rohit Siegel, a famous commodity investor for Dynamic, he said, just get the macro right and then pick the sectors and pick the best companies and the best sectors with the most amount of valuation with the best capital structures. And the guy was right. And so what are the capital structures? Who do you want to own? Like, Agnico Eagle, they're like great growth. Franco's the more conservative name. Kinross, I mean, I used to work for Paul Rollinson. The guy's amazing to work for. He's done a great job turning around that company. What other companies do you want to own in this space? Who are the mid-tiers that you want to own? Who are the juniors you want to own? Who are the micro-caps you want to own? I remember when Yamana was the three-way mess that created it, and Peter Maroney did an amazing job with that. I remember Lucas Lundin when he bought, when we lent him Paul Rollinson lent him $800 million, and he bought Rio Narcia, and he put Tassia into Redback Mining, and then he turned. They created a mammoth company there. Forget what happened, whether Tyberg paid too much for Redback or not, but capital is available today. When capital is available, you have gamma prices that move to the upside, and that's where you want to position yourself, which brings you back to why you want to be in a tier 1 jurisdiction, which is Nevada. You want to pick your sectors you want to be in. You want to pick your trends you want to be in. You want to pick your locations you want to be in, and you want to have a disciplined investment strategy. Like, you don't David Christie is on my board. David Christie has no reason to be involved with us, except that him and I used to work together at Scotia Capital. When he looked at when he looked at Lodestar, he said, Lowell, that's like in the Getchell trend. I go, I know. He goes, that's right near Marigold. I said, yes, I cut my teeth with MacArthur at Glamis on Marigold. And I know about, the Nevada property along there and what goes on. I said, people are going to want to acquire that land at some point down the road. So we need to have a thoughtful, as he said, we need a thoughtful, disciplined exploration strategy in order to create value. So back to your original question about what the majors are going to do. The majors are going to spend money appropriately in order to grow their resource bases over time and grow their production.
Mm-hmm. What is Lodestar going to do?
There's three P's, right?
Yeah,
there's
sure.
the production, there's the proven, and the probable. And I like to talk about the probable and the possible. And Lodestar is in the possible, right? If you have something that's at an enterprise value under $10 million, call it $7 million. What is there? It's less than 47 million shares outstanding. We're trading around 50 cents. So call that $6.5 million Canadian in enterprise value. And, let's say we can spend, I don't know, there's so many different numbers out there. Like, is it $1 million for every 500,000 ounces of resources? Okay, so let's say we spend, $800,000 to $1 million right now, and we start seeing the prospects in the four areas of Gomes, Crown North, Independence, and Robert Snob. And of those four areas, then we do the IP on there. We're able to do the initial drill program. We're able to call it, 8 to 10 holes down. We're able to establish some areas. We're able to do some step outs. Are we able to get to 1 million ounces? If we're able to get to 1 million ounces, what are you going to put that? You're going to put $50 an ounce on 1 million ounces. That's $50 million. So we're call it 5 to 10. We can go to 50 to 60 over the next 3 to 5 years. That's the opportunity, right? The high grade nature of the historic resources. I mean, we have. I wouldn't have acquired the asset if I didn't know that the news would be stacked in my favor in the beginning. If you look at the historical drill results on there's been 131 drill holes, 18,000 meters of drilling that have done on it, and we're going to apply modern technology and we're going to build a resource, and we've got a runway to be able to do that in with the right people, the right industry, the right timing, and for sure the right location. I mean, people
so
are.
Tell us about Nevada and Manitoba, I believe, are two jurisdictions that you operate in. Why are they the right locations?
Well, Manitoba for Lodestar is a historic asset, and we did some work up there, and unfortunately we found pegmatites, but the rubidium ratios were too high. And if the rubidium ratios are too high, that means that there's no spodumene, and if there's no spodumene, there's no lithium. So we needed to pivot and then find something else to do. So we still have that historic asset in there. We can spend money on it. It's a good thing to keep around because the Manitoba flow through for Canadian investors is very attractive. So we could do some VMS work out there. I'm considering it, but I'm not so sure what's going on there. And so that's why once I cleaned up the deck structure, the historic deck structure of the company, that we were able to acquire the Gold Run asset in a tier 1 jurisdiction. We must have looked at 12 to 15 different assets on there, and we settled on this one because of the postal code, right? Like the zip code of it is incredible, right? You've got I-80, you've got the Newmont Barrick partnership, and you've got the Marigold mine. We're right in the location. If you pull up a map, you can see all the juniors around us as well. You've got Peter Palmetto in and around the area. From Westvault, he was the old JP Morgan analyst, Sun Valley Gold. The guy's incredibly smart. You have A2 Gold, I believe, in the area there. That's Kinross's play in the area. You've got West Gold in the area. Now, those are deeper drilling. We're shallow, so the likelihood that we can produce results in shallow, like not going more than 600 feet below surface. I mean, you have to remember when you start going below 600 feet below surface, things get really expensive because it gets hot. So you have to be careful. So these are the things that, you know, the reason why Lodestar is more attractive. I mean, we have the right people. You know, we've got Axiom Exploration. They're in Saskatchewan. They have global expertise. They're involved in Nevada. You know, the people that we have there, Dung Eagle, Ty McGee, just incredible to work with. Leo Horns in Australia. You know, for a young guy, he's got major discoveries under his belt, has worked in Canada before, is excited about Nevada. We have one of the vendors as an advisor, Don McDowell. He's been around forever. It's very important to have boots on the ground in Nevada. And he's a vendor. He has a great line. He goes, drill it or drop it. Fucking love it. Excuse my language. But, you know, you got to either drill the property or you got to drop it. So, and he's there to help us drill it. You know, he said to me when I first talked to him about it, he said, I know where to put the drills right away. Let's just go do it. But at the end of the day, what we want to do is we want the modern technology to do that. And he wanted to work with some good, strong capital markets people. And Bill Matlack, his partner, you know, goes back in the days, the Vitons at BMO, just stellar reputation. These guys, doing business with them is a pleasure. And then David Christie, Randine, you know, we've got great people around us. Our lawyer, Charles Heathy, he's a Canadian U.S. lawyer here in Vancouver. You know, so those are the people. Then, you know, tier one jurisdiction, historic resource, non-compliant, build it out, attract investors, create the right capital structure, be able to raise money when you need to, make people money, and, you know, have some fun while you do it along the way. Isn't that what it's all about? Doesn't it look like I've been having fun for 30 years at this?
Well, it certainly looks like you're very, very experienced. So tell us about, given your experience that you've seen that you've had dealing with other companies, what are you doing differently now that you're head of a company yourself, over the many years that you've worked with other companies and analyzed them? What will make Lodestar stand out under your strategy?
Well, I think that it's very, very simple, right? I have a unique ability to build incredibly strong relationships with people over a long period of time. I mean, I will stand up for my people, no matter what. I try and think about where they're coming from their perspective. I try and listen to what they have to say. And, you know, you're only as good as the people you have working with you, whether it's your IR people like Alliance Advisors and Alyssa Berry and Kathleen Taylor, whether it's, you know, your geologists like Leo and Ty and Doug, whether it's, you know, somebody like David Christie or Randine, who've got tremendous amount of experience. So you're only as good as the people that you have around you. And so I think that's the difference today in running a company versus what I did from a banking and investment perspective for so many years for Bank of America and Scotia Capital, is that, you know, back then it was all about, you know, getting the trade done. What's the biggest trade you're ever going to do? You know, I think my biggest order ever was $250 million on an Enbridge deal from CI Signature. But now it's about, you know, singles and doubles, about listening to people, about building good relationships on the ground, you know, paying your people. You've got to pay your people. Like, you know, you need to provide them with options in the company so that they feel incentivized. You know, it's a bit of a different skill set. You know, my brother, he's in Palo Alto. He's a PhD in industrial organizational behavior. And his 2005 saying was always, humans are messy, focused on the outcome. So at the end of the day, what we need to do is focus on the outcome of the people in the right jurisdiction with the right commodity behind us. And we need to be in the horse race. And I think Lodestar is in a great position to be in the horse race. And I don't enjoy every day at it, but I definitely enjoy most of my days at it. I can't say I enjoy the grind of raising capital, but I definitely enjoy the results of doing it.
What's the next milestone for you? Are you planning to take it into the production? Or you may be going to some JVs with the companies operating around you?
Well, the thought, as David Christie likes to say, we want a thoughtful program for exploration. So we've done soil sampling. The first thing we did was we compiled all the historical data and digitized it. It was a painstaking task. It was pretty expensive, and it took a long period of time. But that digitization work helped us define the targets that we have in the 4 areas, whether it's Crown, Independence, Gomes, or Roberts Knob. Because previous to that, everybody was like, oh, you just need Roberts Knob. But Independence looks great, especially the silver prospects associated with Independence. And I know that Ty and Leo are really, and Don are really excited to drill those. So the next thing is once we have that is the IP survey. The IP survey, first survey starting this Friday. So we should have the results in 2 to 3 weeks. And so we're going to be able to expand out our drill targets and have more drill targets. And once we're able to expand out our drill targets, then the next thing is, we around December 25th, we applied for, Don McDowell applied for our permits in Nevada. It takes 45 days. So let's say those are, we'll have those in the near term. I know that Leo and his team are planning to be in Nevada for 6 to 8 weeks in the middle of March, hopefully, in order to start the drill program, and we'll be producing results. So, that's kind of the near term. The near term is first getting the IP survey done, but really that's for the next drill program, not for this drill program, even though it might give us some data for the current drill program. And then getting the drill permits, then getting Leo and his team on the ground in Nevada, and being there for 6 to 8 weeks drilling. It'll take us another kind of like 4 to 6 weeks to get the results, get those out to the market, and and then raise some capital at some point at the right valuation, in the right structure, in order to do another drill program, and hopefully get all that done within that year. And close the valuations. Like if you go to our website and you look at our presentation, you can see that we hired Atrium Research to do an independent valuation on our company in a spotlight piece, and we pay them to update the valuations versus the comparables. And you can look at it on a per hectare basis if you want, but at the end of the day, we trading at a significant discount to Westward, to the group, and once you look at it, you go, with the results that we can put out, and what we can do, and with the capital that we raised, this is way better than a lottery ticket on a valuation gap decision, right? And in May 7th, when we started trading again, we were, a penny and a half. Now we're 15 cents. And, I think we're going significantly higher just based on valuation. 15 cents, $7 million, 47 million shares outstanding. If you double it, you're at 30 cents. So
something I've wondered to myself is how some explorers who plan to, I'm not saying it's you, but some explorers that have talked to me that plan to go into production someday, their CapEx that's needed exceeds their market cap. And I asked them how they're planning to bridge that gap. And, I wonder how it's going to be done without diluting shares. Do you have an answer to that?
I can only tell you that I don't know what their view is, but
yeah,
the small cap resource space is a bit of a shell game. My view is that, the Peter Maroney, Yamana is, you've got to get together with other people and get bigger to be significant. So my job is to show value, show that I have a resource, and then, we're going to need to figure out how to grow either by having more assets and selling assets. You've got to be more like a merchant banker of gold assets and gold businesses. Wasn't that like the MacArthur way, like with Glamis? Like, didn't he build Marigold, build out Glamis? Then Goldcorp bought it, and then he went on and did something else. Like, isn't that the model? Like, that to me is I cut my teeth with MacArthur in Glamis, when I was a young kid on the desk. And I think that, he used to say that, grade is a great equalizer. The resource is what people look at. Listen, you can go back to 1994. Myself and my family and some of my clients at the time, we invested with Wayne Deans at Deans Knight Capital Management. And he was a big investor in Voisey Bay. And you know what he used to always say? That it just makes me think of it based on what your question is the ore body has no idea who owns it. So is it a capital structure that gets the ore body into production, or is it the right time, place, and opportunity for that ore body to go in production? listen, the next most important thing about the mining space is the person like me who's telling you the story is telling you the best story that they possibly can. And the third most important thing is that, you know, Mother Nature is hiding. So we're spending money. It's true treasure hunting. It's true potential upside. And, you know, that's what makes it a lot of fun for somebody like me and being in the business for 30 years. I mean, I'm not missing any meals, but at the end of the day, you know, you invest capital in certain ways. And this is where I've decided that in my stage of my career, I want to invest risk capital and I want to try and build something that other people are going to be interested in purchasing, and as a share perspective, and we are going to be able to consolidate and or develop partnerships with other people in the area. I think one of the things that I talked about earlier was that I have a very strong ability to build relationships. So, you know, I know other people in the area, but I don't have anything to talk to them about yet. Once I have a drill program, once I've done 2 drill programs, then I have something to talk to them about. Then there's a reason for them to talk to me, right? Like,
excellent. Okay, well, good. Thanks very much. That was a good recap of your company's current plans. So people can follow you and learn more about the company. Tell us where we can follow you.
Well, it's LSTR on the TSXV, and you know, we trade every day. We're trying to increase the volume in the shares, and you know, if you want to talk about the company directly, you can just, you know, you can call me, you can email me. You know, I have many different hats that I wear, but I'm always accessible. I return all my phone calls, and, you know, text me, call me, and I'll call you back and we can talk about the company and, you know, acquire a position, you know, slowly and surely. And, you know, we're looking to make people money.
Yeah, please do contact Lowell. Please do contact Lodestar. Links down below in the description, and we'll see you next time. Happy New Year, Lowell. Take care for now.
Thank you. That was fun.
Yeah, that was a lot of fun. And thank you for watching. Don't forget to like and subscribe.